Hey, what's going on, everybody? And welcome back to another episode of Wealth Defense Radio, the podcast. I am your host, Josh and Hector, and I'm an independent advisor representative for SWAN DFW, which stands for Sleep Well at Night, Dallas Fort Worth. And the man on the other side of the screen from me, he's at the top of your mind and at the bottom of your heart, and is just getting over his chocolate Easter Bunny hangover.
Yeah,
It
it's
is
tough.
Hector Hinojosa.
Good afternoon. It's good to be back.
Yeah,
We've
it's
missed
been a
each
minute.
other.
So, today we're talking about the general market. It's been kind of hectic the last, while, but that's what we're going to talk about today. Kind of what are you trading on? Is it the war? Is it fear? Is it inflation? Is it the job market number? And we're going to talk about our philosophy. Did I set that up well?
I think that's set up very well.
Okay, okay. So why don't you take us into our thoughts on this? But before he does, give us a like if you're on YouTube, subscribe, leave us a comment on Spotify, give us 5 stars, Facebook, give it a share, just help us reach more people. That'd be awesome.
Yep. So for the last month or so, as the war has been going on, the market has been rather volatile, and but not as volatile as you would expect with a war, especially right in the Middle East. That's disturbing. That has a potential to disturb or has disturbed all of the oil flow. And so we're getting calls, especially from new clients that we're sitting with, and they're asking, so what are you all trading on? And you went through that list, and is it the fear? Is it the war? Is it the Truth Social post? Is it
Yeah.
uh, what is it that you guys trade on? And I think the very first thing that we need to distinguish is there's a huge difference between a broker or a trader and a wealth management company. And we're a wealth management company, and we're not in to trade in for the short term. We're not going to hold something for 3 or 5 days, or we our criteria for selecting what we are going to buy is different than what a trader would do. And so I thought it would be a good time to talk about what the difference is, and then kind of what we look at before we buy or invest in a particular company.
Yeah, I think there's a lot of fear and instability, or fear of instability, I guess, in the general market. People are kind of scared. I mean, oil prices have spiked pretty significantly in the past weeks as we record this. It feels like a lot of trading is based now more on news than on actual like financials of companies, maybe, which we're going to talk about in a minute.
Yeah, well, and that's it's always been, if you've ever listened to any trading uh, show or podcast or whatever, is uh, you you trade you trade on the rumor and you sell on the news. Because
Yeah.
if you're right, you're gonna make a lot of money once the news breaks. But and there's a lot of different ways of doing that. But the reality is, that's a different. It's still investing in stocks or still buying stocks, but way different than what it is that we do.
Yeah, for sure. So we have some, I guess we'll call it SWAN criteria that we look for that we're going to dive into. We have 5 bullet points here. And the first one is we have to understand what product or service they provide because there's a lot of like momentum traders and you just trade on, oh, this thing is up 35% today. I'm going to buy it for tomorrow or I'm going to short it for tomorrow. And you have no idea what it is
Exactly.
that they do. And that's not what we do here at Swan.
It's not what we do, but as you were talking about that, there's a story. I don't remember how old it is, but there was a momentum trader, and he was sitting listening to something on CNBC and said, "Cool, I'm gonna go buy XXX." But he bought XXY. Now he didn't know what XXX did. He just heard that it was a great stock and a great opportunity, but he entered XXY on his buy. Now it happened that XXY performed extremely well. When he went back 4 or 5 days later, he'd made 8 or 9% and was getting ready to send an email to whoever he was listening to say, "You're awesome," when he realized he hadn't even bought the right company. So forget about
Yeah.
knowing what a company does, not even buying the right company. That's an interesting anecdote. But and I say it just because that's what you're doing when you're buying a ticker that you don't even know what it is or what it does. Or we don't do that. We want to buy a company that we understand, usually a company that's more mature, a company that whose products maybe we even use, or perhaps a company that provides a product to the companies we use. And so, yeah, and so it could be argued, and I've had a couple people bring it up, is you're never going to buy the stock at $5, and that's true. We're just not going to do that because we're more interested in where the company is going to be 5 or 10 years from now, as opposed to tomorrow or the day after. We handle families' life savings. This is all the money in the world that we have, and we don't want to take extraordinary risk with that. We want to buy really good companies that we understand, and we use very similar to Warren Buffett's philosophy is buy things we understand. And so that's our first criteria is we want to recognize the company and we want it to, and we just want to know what it is that it does.
Yeah, your story reminded me of another story I read about. Somebody, I read this on Reddit, so take it with a grain of salt. But the story goes that this friend was kind of into investing and gave his other friend a tip that he should buy into Cisco, the computer company. Of course, Cisco, it didn't work out, that one. And then years down the road, they had to attend a wedding together, and he was like, "Man, this guy's gonna be ticked off at me because I took his $5,000 and made it $0." Da, da, da. And he went up and started to apologize to this guy, like, "Man, I'm so sorry about recommending Cisco and all this." And he's like, "I don't know, like it's been doing fine, like it's like been fine." And it turns out, dude bought the not the Cisco computer company, but he bought the Cisco like bread company.
Right. The food company.
Yeah,
Yeah.
and he
It's
was
a funny
like,
thing. It's a funny world.
it's worked out pretty good for me, honestly.
Yeah.
So number two here, we look at the balance sheet. We want to have good financials.
That's it. We don't want a lot of debt, although sometimes companies carry some debt, and that's okay if it's manageable. We just want a solid company that isn't overextended. They call it, over their skis. We want good cash flow. We want good return on investments. We want, all of those things, but the balance sheet needs to be solid. And so again, we don't want to take a flyer on somebody's idea who's borrowed a bunch of money and is doing like a startup. We want a mature company with a great balance sheet.
Yeah. The other thing we look for, point number three, is great leadership. You want someone with a good track record leading your company. Is that true?
That's yeah, because a company will start to take any organization will start to take on the personality of its leadership. And if you've got a good, stable leader, CEO that has surrounded himself with great in the C-suite, has great people around him, and has a, like you say, a track record of doing that, or has a track record in that company of doing that, anybody can lead in good times. Where leadership really shows its moxie is in bad times. What do they do? And so that's a real important thing. If they've been there for a while, they've been through some of the downturns, and they didn't panic, and they poured more money uh, into their company, or they acquired something. How are they reacting in the when the company is being challenged? and how did they get out of it? Those are the things that make great leadership. Um, so so we want to look at that. Anybody can be a great coach when you got like nine great all-star players. You're gonna win a lot of baseball games. It's when you don't have them, how do you manufacture runs? How do you keep your team in the game even when it's being challenged? And that's what great leadership does. And a track record of that is a great place for us to look and say, these are companies we want to invest in.
Yeah. Point number four here is we look for market leaders or known companies. This kind of ties back to understanding the service they provide and what they do or product they provide. You like for it to be a known company, or we
Sure,
like for
and
it to be a known company that we're investing in.
absolutely. And sometimes a company has got just a great story. I guess a good way of saying this is we want to understand the story. Apple is one of our favorite companies, and everybody thinks Apple is just a cell phone company, but I'm doing this on a Mac. I've got an iPad, I've got Apple Watch. If they had Apple socks, I probably would
iPhone.
have those too. But the beauty of that is that when you become part of the Apple family, even if somebody did come along and say, "Hey, we got a much better phone," everything else is already talking to each other. And so the persistency of people staying with the products once they have more than one is enormous. And then you start buying all the apps and you start subscribing to all the things. And so even if it never sold anything else, Apple's going to be really, really profitable. That's a great story, and it's got great leadership. Amazon is another. People think Amazon and they think, oh yeah, the gray truck or the blue truck that comes, well, to my house twice a day sometimes. And that's a big part of what Amazon does. But the other part of it is, as they were trying to figure out how they were going to get you stuff the next day, they had to create a web service for it to talk to each other quickly. That has become Amazon Web Services, AWS, and it's a giant in that area. And it's a part of Amazon. If it was split off, it'd be a great company, but it's part of the Amazon family. So when you buy Amazon, you're buying two really good companies. Those are the kind of stories we like to hear, we like to invest in. Is we're going to be owners of these companies. We're not going to be traders. We're going to own them for a while, and we want to meet that criteria.
Yeah, our last point here is growing market or market share. You want to be invested in a good company that's growing.
Yeah,
You
this
don't
goes
want to be the
all.
Cisco computer guy.
Yeah.
You want to be the
Uh,
Cisco food guy.
you want to be the Cisco food guy. Way back, if you think of it this way, way back when we were mostly an economy on horseback, and buggies. There were buggy whip companies, and this thing came along that was called an automobile. It moved itself by itself, and they didn't know. That was scary, and it didn't know, um, if it was going to work or not. But over a period of years, you could see that the automobile market was growing and growing, and the buggy market, especially the buggy whip market, was getting smaller and smaller because there was fewer people buying that. Yeah, you don't want to buy a leader of a company whose market is shrinking. If you bought the best buggy whip company when the whole buggy whip industry was collapsing, that's not a good place to be. You want to buy a leader in a market that's growing. Technology, artificial intelligence, those are our future. So we want to have market leaders. It's the stuff we want to invest
Yeah, for sure, for sure. So, those are kind of the five things that we look for um, in investing long term for retirement. More stable companies and news and leadership and products and growth rate than just what's the inflation number today
in.
or
That's
what
right.
is the war doing today.
Yeah. Yeah, and it's not to say because there's some companies or some clients that sometimes have some insight on some companies. And they'll come and they'll say, what do you think of this company, this particular company? And we'll go do the research and we'll tell them, yeah, we think this is it's in a good place. We don't know that we don't obviously follow this like we follow our key companies, but we'll give we'll give our, yeah, this looks like a good company to invest in, or more importantly, we'll say, this is a bad idea. We have a client who went on his own and bought uh, a a company that he won't sell, even though it's down to almost uh, not being worth very much, because he wants to remind himself every quarter not to do something brilliant like buy a company
Yep.
that has no research behind it. So yeah, we're not. Some might even call us a little boring. I never think we're boring, but we get really good results, good returns, and we get the maximum rate of return for the amount of risk people want to take, and that's where we hang our hat.
Yeah. So, if you want to talk to us about your retirement planning or any kind of financial questions you may have, we have a couple different ways that you can contact us. The first way is via phone number, and that is 888-792-6339. Or we have an email address, and that is info@swandfw.net. Both of those will be in the description wherever it is you are watching or listening.
Yeah, please give us a like, and thank you for listening today. We really appreciate it.
Yep. So, thank you guys for listening. We'll catch you on the next one.